Welcome to the Werthstein Index Update. Giles Keating, can you explain what a bottle of ketchup has to do with the stock market?
Look, the mystery in the United States is that unemployment has come down and down to some of the lowest level in decades, and yet wages just are not really shooting upwards. So why not? Well, some economists think that it's rather like a ketchup bottle. You shake it and you shake it, nothing happens, and then eventually all the ketchup spurts out. Same idea with wages. Eventually, quite suddenly, they'll start to rise really rapidly. When that happens, I'm afraid Mr. Powell and his colleagues at the Federal Reserve in the US will push interest rates up more quickly, and I'm afraid the stock markets can then come down. And that's why I stay with my very cautious vote of a number 1. I just don't want to capitulate.
Well, I will go with Giles on this. The Fed is plowing ahead with another 2 rate hikes to come this year. And the frighteningly rising level of the US debt is a major concern. Furthermore, we are not finished with the trade war and its possible consequences on the US economy as well as the world. In Europe, tensions are rising too, with Italy especially under pressure. So even if the euphoria continues for a while, remember that the Fed and other central banks are really taking the punch bowl back. So I will stick to my vote of 3.
Valerie and Giles simply refuse to understand that stock markets can't collapse, because if they did, we'd have a global economic crisis like in 2008, and nobody wants that. And as long as the central banks and even the Fed don't get really restrictive, I see no alternative to shares. I don't want to make light of the world's problems, but where there are problems, there are solutions. And in my view, that means the Werthstein Index as a whole ought to be pulled up. So my vote is not 7 but 8, so that overall it doesn't look so disastrous for the equities markets in light of our assessment. What does the technical analysis tell us? Michael McDonald in London.
The S&P from a technical perspective is modestly bullish. We do think it could run towards 3,000, but it's a psychological level, and we anticipate risk-averse clients will begin to reduce exposure and move towards a neutral stance. This is also being seen in Europe. We've got the DAX relative to bonds are also showing signs of weakness. We think the DAX will begin to underperform bonds as investors again reduce their exposure. The levels to look for on the DAX are 11,700, which is the current year low from March. We anticipate a break below there towards 11,000. With this in mind, my vote is a 3.
The Werthstein Index is the average of all the ratings and reflects the experts' expectations for the next 3 months. 1 means extremely negative, 10 extremely positive. The index for September is 3.8, a slight increase compared with August.